Hey peeps, welcome back. So today we're going to go over the YieldMax YMAX and YMAG distributions that were announced today for February of 2024. Let's get it. So the first thing that I want to bring up to you guys is the overall performance of the YieldMax ETFs today. As you guys can see, there was quite a bit of green. Pretty much green all across the board, with the exception of TSLY and Zomo. Obviously, you can see Coney's up massive; it's 10%. But we did tell you guys in the Bitcoin miner stocks video, along with Coinbase, back when Coinbase was at I think like $110 and all the Bitcoin miner stocks were at support. We were like, "Hey guys, it's at major support. Whether you choose to buy now or not, that's up to you. But it is the perfect buying opportunity." And ever since then, we've just blasted off. So you guys can see that a lot of these have actually gone up quite a bit. So Netflix up, AMD's up, and Squeeze up all more than 3%. And of course, ORC is up massively too. So that's roughly about a 5% move. Reason being, as you guys can see here on the chart, the Russell 2000 just had a massive rip this morning. Actually, if I zoom this out, you guys will see the full magnitude of this move. It was just a huge move. So basically, the Europe session, which starts at about 3 a.m. Eastern time, from that point to the top here was just a monster move. It was like 40 points or something like that. That's a huge move for the Russell. So that pretty much covers the YieldMax ETFs on the charts. And as you guys can see, Coinbase is up a massive 15% today. All of the miner stocks have just absolutely shredded resistance. Well, I shouldn't say shredded resistance, but they've shredded their previous day's trading, with the CPI dumping the market. And then, of course, this morning, for whatever reason, maybe it's PPI or something, I'm not sure, I didn't look into it, but it just absolutely shredded to the upside. So you guys can see here on some of the underlines are up big. Netflix is up, Nvidia is up, Tesla is actually up. Wow, shock. Tesla's up. I mean, whether it's going to go up a lot more or not, that remains to be seen. But we told you guys about the bullish confluence on the one-day time frames. So anyways, with that being said, you can see pretty much the only thing here that's down is actually Zomo. So that's pretty much it on that. So in terms of the YMAX and YMAG, kind of the way that this is going to work with these two funds is pretty much, if the underlines go up, the fund of funds, as they call it, is also going to go up. So, your YMAG is your Mag 7 stocks. That's Nvidia, Tesla, Apple, Amazon, Microsoft, Meta, and forgetting what the other one is, but you guys know what the Mag 7 is. I don't think I really need to explain it to you. So, and then of course the YMAX is all 18 positions, so it's everything, including the Mag 7. So pretty much when the underlines go up, these are going to go up as well. Obviously, YMAX gives you a lot more diversification. You get 18 different positions instead of 7 with YMAG. So anyways, here are the distributions. For some reason, could not find them on X, so we had to look them up personally. But you can see here, you got the fund of funds. You got YMAX at 31% and YMAG at 25%. The reason why the YMAX is probably up more is because of the heavier diversification. So we get 53 cents per share on YMAX, which is actually pretty good. I have to admit, with as diversified as this thing is, I was not expecting it to be this much. But I mean, it's actually good that these are only paying this much, and they're not paying like some insane $1, $2, $3 per share, because that erodes the price, and obviously we don't want that. At least, especially not in like an ETF version. Definitely not in an ETF version. We want the price to go up. So when I say that this thing can recover 43 to 53 cents over the next month, assuming that all the underlying stocks in the markets are bullish, I would say the answer is probably yes. So when they sell out the 53 cents or 43 cents or whatever it is, these will drop down to, like, let's say, I don't know, $20 and like maybe $20.50 or something like that. Could it go back to $20.50 and $21? Yes, I would say so. Because again, the distribution is not nearly as huge as some of the other ones. Like, Nvidia was like $1.70 or $1.60 something. Coney at one point was like $2.60. I mean, that's a huge payout. So Pretty good. The X date is tomorrow. Again, if you did not buy the shares today, I mean, of course, you could always buy them tomorrow, whether you're going to get paid on the 20th or not. That I cannot answer for you. M1 Finance usually does next day trading. So if you place a trade on M1 today, it will not get filled till tomorrow. Whereas Robinhood and Webull, they do same day execution. So you would get filled if you bought these tomorrow on Robinhood or Webull. But again, whether you get the payment on the payment date or not, I'm not sure. As far as I know, X dates, to get paid from a dividend paying stock, you have to own the stock the day before the X date. So with that being said, you guys can see there's a lot of green here in the portfolio. So massive, massive green. Again, pretty much the only thing that we have that was down was Aptly. And isn't it interesting? I actually forgot to mention this, but yes, we read the 2-to-1 stock split. We're going to talk about that in a little bit, but isn't it interesting that Tesla is actually going back up after they announced that? I found that to be quite curious. So, anyways, with that being said, as you guys can see, the the Bitcoin miners are just killing it, absolutely killing it. I mean, look at this, 20% in one day on HUD 8. That's crazy. So 10% on BTBT. That's getting pretty close to the strike price. Might actually have to roll the contract in the morning. We'll just have to wait and see. And Cypher is up a massive 16%. So here's our shares of YMAX. We did actually buy some, just so y'all know. We bought some today as well because we wanted to get the payment before tomorrow, since tomorrow's the X date. So we bought $20 here, basically 0.96 shares, about 6 hours ago. And we have roughly about 9 shares. So we're going to get somewhere around, I'd say, like roughly about $4.50 to $5 in a payout on the 20th. Now, what's cool about the YMAX and the YMAG fund is they pay you your dividends, and hopefully this is the same going forward, because I like the fact that the payment date is different than with the individual YieldMax ETFs. So they pay you like in the third week of the month. So if I were just to try to create like a payment calendar, like, okay, so you got your YMAX and YMAG, it pays out in the third week. And then the let's see here, Curve Invest and the FEPI ETF, they pay closer towards the end of the month. Clip pays towards the end of the month. The Defiance ETFs pay roughly about the first week of the month, and the individual YieldMax ETFs pay roughly around the 10th of the month or so. So it creates like a nice snowball effect if you were able to like roll those dividends into the next fund every month, also known as the dividend capture strategy. It could really create a really fast moving, fast growing, powerful dividend snowball. And this only adds to the compounding, in my opinion. So I really hope that they keep it this way going forward. That's my hope. Of course, it's their fund. They can do what they want, but that's kind of what we're hoping that they're going to do. Are we really worried about the 1.28% expense ratio? Not really. I mean, if it's paying 53 cents per share, your distribution amount's 31% this month. Are we going to care about 1.82%? Not really. Still going to walk away with a 30% yield. So now, as for the TSLY stock split, are we really worried about the TSLY stock split and what it's going to do to the price of TSLY? Not really. I mean, look, if I'm being completely honest, we kind of expected this to happen already. Reason being was because the share price is getting pretty low. I mean, it's not really, I'm not going to say it's not the people at YieldMax's fault that this has happened. We don't know what their trades are on the options market. We don't follow that. I'm aware that there's other people that do that, but we don't do that because we don't have time. But I mean, the reality is Tesla, the underlying stock Tesla, has just been getting absolutely smashed due to politics and the Fed funds rate and inflation. We've been telling you guys this for months, and a bunch of other stuff. So is it any surprise that they're going to do a 2-to-1 stock split? Not really. Nothing really changes. You get half the shares and the share price is twice as high. So even though it looks different, the monetary amount that you have invested into the TSLY ETF does not change. So, like for instance, I'll click on this here and I'll give you guys like an actual example of what it's going to look like. So we're very familiar with stock splits. We've seen this many, many times throughout the years in the markets, and believe it or not, it's more common than you guys think. Don't really be surprised if I'm not going to say if this happens on another YieldMax ETF, but don't be surprised if you see something like this on another stock you're looking at in the future. It's actually very common for reverse splits or stock splits to happen, believe it or not. I think Tesla actually did one at one point, and so did Amazon. So Tesla's share price used to be like $1,000 a share, and Amazon's was like 3,000 some a share. If you guys look at the stock price now, it's like very small compared to that. That's because they did a stock split. So even with the biggest companies, it happens. It's really, really common, believe it or not. So our current share count is 50 shares, and our average price, or I should say, the current price of the YieldMax ETFs for Tesla is 883. So basically, what it's going to look like when it does the stock split is we're going to have 25 shares instead of 50. The current share price at that point in time will be roughly about $17, so about double this price. Our average cost basis probably will not change, or if it does change, it might go up to like double the current price. So I know it looks weird, but this is the way it works. So basically, the market price would be 17. Our average cost basis would be like $29, which I know seems kind of ridiculous, but that's the way it works. But in terms of this amount, we would still be down in unrealized losses the exact same amount, roughly about 40%. This number right here, we're not expecting this to change. Do I think it's a bad thing that they did a stock split? Not really. I think it's necessary to keep it on the market. I mean, once the stock gets to like, I think it's like $2 or less or something like that, there's a risk that it could be delisted from the New York Stock Exchange or the NASDAQ or whatever it's on. And be sent over basically to pink sheets or OTC, which is kind of more of like a penny stock kind of market. We don't usually address that on this channel, but that's just kind of the reality of things. That's the way it is. I don't think that it's a good thing or a bad thing. I think it just simply is what it is. The reality is Tesla has just been getting absolutely destroyed. So until it has a big move back up, this is probably just simply what they got to do for now. I mean, it's just a matter of business. So, but if we, yeah, I mean, as we can show you guys here on the Tesla chart, basically, pretty much ever since this peak in July, as you guys know, covered calls, the way it works is 100% of the downside and there's limited upside. So the more this thing goes down, obviously, the more it hurts the covered call ETF. But as you guys can see, this thing was down a maximum of 41% from the high to where it is now. So that really has nothing to do with the covered call. The covered call simply mirrors the price of the underlying stock. So if the stock goes down, the ETF is going to go down. That's the way it works. So now we'll take a look at TSLY, similar time frame here. So go back to this July peak, and I really have to scroll this down. Okay, so yeah, that's roughly about the same amount. So the TSLY ETF went down a little bit more than that. But again, you guys have to understand the reason being is because they're also paying out dividends. If they were not paying out dividends, it would probably literally be exactly negative the same amount that Tesla is. So 2-to-1 stock split, another dividend paying stock that we have that has actually done this recently is TWO, where Two Harbors Realty or whatever it's called, but the ticker symbol is TWO. They recently did a stock split as well, and nothing really changed. I mean, the dividend was decreased slightly, but basically it was 15 cents. So the price went up by double, but then the dividend before was only 15 cents, and then it went up to like 45 cents per quarter or something like that. So, I mean, there's not really much of a change. The price will double, the dividend will double, but the amount that you're in the money or out of the money in terms of what you have invested, what we have invested will not change. So anyways, this is the YMAX and YMAG distributions for February. Hope you all enjoyed this content. Please like, comment, and subscribe, and we'll see y'all later. Peace.